Welcome to Fat City Finance. Today, we're analyzing the impact of global debt on the economy. Before we dive in, please take a moment to like, subscribe, and ring that notification bell. Now let's kick things off by understanding what global debt is. Picture this. Global debt is the total sum of all outstanding debt owed by every sector of every country in the world. It's a colossal figure that includes the debt of households, corporations, governments, and even the sub-governments like states or provinces. As of late, global debt has been making headlines, and not for good reasons. It's been ballooning to record highs. To give you a sense, in the third quarter of 2023, worldwide debt reached an astounding $307.4 trillion. And it's predicted to climb even higher, potentially hitting $310 trillion by the end of 2023. Understanding global debt is crucial to grasp the state of our economy. But how does this debt impact our economy? Let's find out. Global debt impacts the economy in several ways, and it's essential to understand these impacts to make informed decisions. So how does global debt impact the economy? Well, for starters, high levels of debt can lead to economic instability. When countries are heavily indebted, they may struggle to repay their loans. This uncertainty can cause financial markets to become volatile, as investors become wary of the potential for default. This volatility can have a knock-on effect, destabilizing economies and leading to periods of economic recession. Moreover, high debt levels can also affect economic growth. When a significant portion of a country's income goes towards servicing its debt, there's less money available for other areas like infrastructure, education, and healthcare. This can slow economic growth, as these sectors are vital for a thriving economy. But it's not just the debtor countries that are affected. Creditors too feel the impact of high global debt levels. When a debtor country struggles to repay its loans, the creditor country may also face financial difficulties. This interdependence means that high global debt levels can cause economic problems on a global scale. Finally, high levels of global debt can also lead to geopolitical tensions. For instance, if a country is heavily indebted to another, it may feel pressured to align its foreign policy with that of the creditor country. This can lead to political instability and conflicts. So, we've seen that high levels of global debt can lead to economic instability. But what factors are contributing to this rising global debt? Several factors contribute to the rising global debt. Knowing these can help us understand the bigger picture. One of the major culprits behind the surge in global debt is the pandemic that shook the world a few years ago. As economies around the globe came to a screeching halt, governments had to dig deep into their pockets to provide financial support to businesses and individuals alike. This led to an unprecedented spike in borrowing, contributing significantly to the global debt pile. Another factor is the persistently low interest rates. In an attempt to stimulate economic activity, central banks worldwide have kept interest rates at historically low levels. This has made borrowing cheaper, encouraging both businesses and individuals to take on more debt. While this strategy can boost economic growth in the short term, it adds to the overall debt burden in the long term. Government spending also plays a critical role in the debt equation. In many countries, public spending has increased dramatically in recent years due to various factors including infrastructure projects, social welfare programs, and defense expenditures. Often, this spending is financed through borrowing, which adds to the country's debt. Lastly, let's not forget the corporate sector. With easy access to cheap credit, companies have been borrowing heavily to fund expansion, acquisitions, and share buybacks. While this can boost corporate profits and stock market performance in the short run, it increases the overall level of corporate debt, which is a part of the global debt. In essence, the rise in global debt is a result of a combination of factors, including the pandemic, low interest rates, increased government spending, and corporate borrowing. It's like a snowball rolling downhill, getting bigger and bigger with every roll. These factors have led to a surge in global debt, but what happens if this trend continues? If global debt continues to rise at the current rate, it could have severe implications for the future. Take a moment to consider the trajectory we're on. Global debt levels are skyrocketing, with the total expected to surpass $310 trillion by the end of 2023. This isn't just a number, it's a ticking time bomb of economic instability, and we're all living on top of it. Economic instability is one of the primary concerns when we talk about high global debt. With so much money owed, the economic balance of the world becomes delicate. Think of it as a house of cards, where each card represents a debt. As more cards are added, the structure becomes increasingly unstable. A single economic shock could knock the entire structure down, leading to a global financial crisis. But the implications of high global debt aren't limited to the financial sphere. They also extend to geopolitics. Countries heavily in debt may find themselves in vulnerable positions, potentially leading to shifts in global power dynamics. It's a precarious situation that could have serious implications for international relations and global stability. Now imagine the risk of financial crises. When debt levels are high, the risk of default increases. This could lead to a domino effect where one country's default triggers a chain of defaults by other countries, leading to a global financial crisis. And we've seen this happen before in the financial crisis of 2008. These potential implications are not mere predictions or theories. They are real possibilities that we need to be aware of. But awareness is only the first step. The next step is action. We need to address this issue intelligently and quickly. We need to find ways to reduce debt levels and create a more sustainable global economy. These potential implications highlight the importance of addressing the global debt issue. Global debt is a complex issue with far-reaching implications for the economy. It's crucial now more than ever to understand and address global debt. It's not just a number, it's a reflection of our economic health, our choices, and ultimately, our future. So let's keep this conversation going. Share this video with others, start discussions, and let's all become more financially aware and responsible. Thanks for watching. Remember to like and subscribe to our channel for more insightful content. And as always, happy investing.